Welcome, everybody. Steven Sitkowski here. This is my Market Minute, where I take a look at what's going on in the financial markets, try to summarize it in a couple of minutes so that you know what's happening, but you don't have to spend your life studying the financial markets like I do. Now, I actually enjoy it. But if you don't, let me kind of give you the essence. It is July the 7th. As a reminder, everything that we do here is for educational purposes only. It is not intended as investment advice. So, what's driving the markets? Well, apparently, we have a report of some tankers that were attacked in the Strait of Hormuz. So, that has created all kinds of trickle down impact. Oil prices higher, interest rates higher. Stock market doesn't like uncertainty. Everybody wondering what's going to happen next. So that has definitely had a negative impact on the market, which is down to start the day. Chip makers, their prices are falling. I think that's more profit taking than anything else. There's a number of chip makers where their stocks are up more than 100% year to date. And when you see that kind of parabolic rise, there's always going to be a pullback. Some people that are going to look at that and go, I don't know, it can go much higher. And they end up cashing out. The Dow pulls back from its record levels. Let's see what it's down on the day. So it hit an all-time high yesterday, which was kind of nice. Went above 53,000 for the first time in history. But not so much today. It's down 215 points. We're at 52,840. S&P, as of this recording, is down 0.66%. The Nasdaq, 1.37. The Nasdaq 100, which are the 100 largest companies trade on the Nasdaq, just call it big tech, is down 2.12%. So that's kind of ugly. Oil is up now, back up above $70 a barrel. And the 10-year Treasury has moved above 4.5%. So, I like to tell people below 4%, the market is giddy. 4 to 4.5 is kind of Goldilocks. Above 4.5%, the market gets a little growly. Above 5%, it gets angry. It would pull back probably 10%. I don't think that's going to happen. But the stock market likes lower interest rates. And anytime we have problems in the Middle East, oil prices go up. That's inflationary, causes interest rates to move higher, and stocks usually pull back. So it's just following the playbook at the moment. So let's take a look at the charts. When in doubt, always go to the charts. I want the S&P 500. So we look at the SPX and we see some recent chop. So basically, and this is a 6-month chart you're looking at, we went sideways, then the war broke out, equities fell, had the ceasefire that didn't stick, equities went up, had a couple of pullbacks. We have stayed above our 50-day moving average. We are still above the 50-day moving average, but again, you're starting to see a rollover on this chart. Here, let me kind of draw out for you. So we saw a rollover here, a rollover here, rollover here, and now another one. Now, the good news is that the slope of the 50-day moving average, which is the yellow line, is moving higher, and we're still above. So nothing to panic about, clearly. But definitely some softness on the day. And I think, it's a combination of profit taking with chips and those tankers getting hit. And that creates uncertainty. So, those of you that would like a little more expansive perspective, I do a podcast. It's called Building Wealth with Steven Sitkowski. Feel free to check it out. You can get it on Apple or Spotify. My last one was actually 53 minutes long. So I try to keep them 30 to 45 minutes generally. So there you have it. There's your market minute, my friends. And I'll look forward to seeing you once again tomorrow. Make it a blessed day. Bye.